So this is segment three, wherein we are talking about the underlying strength in the market, and let's talk a bit around this one. And we have the data, and let us see what all things are happening. So currently distribution day count is around 4, which is kind of a bit bad. We would not want this number above 3, and the India VIX has settled around 15, right? So last day it kind of increased, but it showed us the levels of 15, which is a very nice scenario. There is no swing signal as of now. The index is kind of breaking down, and it was a bad breakdown. 180 stocks are in a stage two, so we have seen a decline for last 2 days. That is kind of bad. And let's move on the right hand side, and we'll see if things are uh, good, bad, or ugly. So we can see that the things are kind of okay underneath the market, wherein we can see that the number of stocks making new 52-week high is higher than the number of stocks making new 52-week low. So underneath the market, it seems that it is an orderly constellation where we don't have a large number of stocks breaking down in stage four, or the 52-week low decline. That is not happening. If that happens, then we'll see a negative number in here. So we'll wait and see if that happens or not. Beyond that, we can see the trend. So right now, the kind of trend that is there, it's on the negative side. We can, as we have spoken last week also, that the positive directional index is not picking up. Actually, it's kind of declining every time, and then it's working in a reverse manner. And yeah, so a negative one is kind of overpowering the positive one. So these are kind of a few negatives which are there. And again, this week we'll have to wait and see. It's not a kind of bad signal that we are getting right now. So until two or three factors turn actually negative, then we can say that things are actually bad. It's not that bad. It's an orderly constellation that is ongoing right now, and we'll just wait and see how things happen going forward. Okay. So this was right. So this is a new segment wherein we'll discuss about the ETFs, and these ETFs are actually the mirror image of the indices as which we have spoken about, right? So first of all, we have done the analysis about the indices. Next, we are talking about the ETFs. Again, this is mirroring Nifty 50. It is a bad breakdown that we can see in Nifty also. Nifty ETF, Nifty B is also breaking down. There was a partial gap filling in case of Nifty, which looked almost like full gap filling, but in this case, the gap is still open around 262. So we'll have to wait and see if this ETF is going to close below this gap or not. So this gap is still open for this ETF. If we see the long-term chart, right? So starting from this level, right? September 2024 till date, we are there. Okay. So we are consolidating big time in case of Nifty, also mid cap and small cap. Nifty made an all-time high against the mid cap and small cap beforehand. So Nifty was outperforming both of them. But right now the Nifty is underperforming both of them, right? So this is the scenario, as we have spoken last time also, that any constellation that lasts for around 2 3 years, right? That creates an opportunity, a spring type opportunity for the index to climb upwards, right? So we are in a zone right now. So every week we will talk about the same scenario. We'll move towards the next ETF. Next ETF is Junior Bs, right? Again, same scenario, but this ETF indicates like the strength of the Nifty next 50 stocks, right? So as we have seen last time, this was the constellation that happened, and beyond that, it gave a nice move of say 82%. Prior to that, after COVID, it gave a move of 85%. So, as a rule, Nifty next 50, that is junior Bs, would outperform Nifty always in a cycle. Okay, that's a rule that is being followed, and you can see that it is always linear, right? Against Nifty 50, it is always linear. So the kind of consolidation that we are seeing in Nifty next 50, so one contraction, two contraction, a handle formation on the right hand side. And again, same scenario, 200 DMA is flat. The 50 DMA is moving upwards. There is a reversal that has happened, and all-time high is around 830 and is trading around 767. So right now it is forming a handle formation and anywhere close to 200 EMA would be a nice one. And with respect to volumes, as we can see, there are multiple high stable volumes around these levels, wherein a lot of market participants might have created some positions in this case. And again, it is consolidating since September 2024, and this is the same pattern as we have seen in case of the mid cap and the small cap, right? So again, it's better poised, right? Next is midcap 150Bs. Again, I think it made an all-time high last day only. Yeah, it made all-time high last day, mirroring midcap 150, exactly mirroring everything. And this is a nice formation wherein we have talked last time also that a 100 formation is pending. So any formation on the right-hand side around 200 DMA would be a very good one in this case. And again, checking the chart, right? On the left-hand side, as we can see, the chart that we have seen for the mid cap 150, we have seen around 80 to 83% kind of move. In this case, that we have the ETF, right? So we can see the full move in this case that it gave 101% kind of move in 79 bars, right? And before that, we have had a nice consolidation. Okay, so we can see that this is a very nice third contraction that is happening after a V-shaped reversal recovery. So let me show you, this is a downward contraction and again a V-shaped reversal recovery and a handle formation is ongoing. So this is a fantastic chart, I would say, wherein it has crossed all-time high already, and this is the strongest one. Next one, we have the mid-cap select ETF, wherein we can see this chart wherein it is again consolidating in an inverted head and shoulder formation. It is kind of a bit choppy as compared to the other ETFs, but it is kind of a bit concentrated in the mid-cap ETF segment. For now, mid-cap 150Bs is kind of outperforming this one also. The consolidation would keep on going as long as it does not break out, right? Next one, we have SDFC small 250, right? So again, this looks very clean, very nice. As we have seen in case of Nifty small cap 250, that chart is also very clean. And in this case also, it looks very clean and the volume has reduced substantially in last 2 weeks. It is very close to its 200 DMA and the 50 DMA is trying to move upwards. And again, as we see that for next 2 to 3 weeks, the consolidation might continue and it might hit 200 DMA up and down. We can say 2 or 3% up and down around 200 DMA. But once that consolidation is done and it turns up, right, that brings an opportunity for all-time high breakout to happen, right? So to see in this case, in the last run, right, it gave 106% kind of move. As we have already told multiple times, that the small cap would always move faster than the mid cap and the large cap, but the kind of volatility that you see in mid cap and large cap, that would be lower than small cap, right? So the standard deviation would be kind of lower, and that is what people attach to risk nowadays. So that is the scenario. And lastly, we have the small cap 100 ETF, right? So it would be the fastest amongst everything that I envisage. And right now it is consolidating and again, it's into a good form right now, consolidating nicely and not much data. I mean, this is a recently listed ETF for small cap 100. So as a rule, we can say that the small cap 100 might outperform the small cap 250, right? Because it's more concentrated. And that is why we are talking about this thing right now. And again, consolidation is ongoing and the pattern is very nice. So we'll conclude with this one. Apart from this, we introduced kind of multiple new ETFs and indices last week. One of which is obviously Nifty Pharma, right? So prior to everything, Nifty Pharma broke out to its all-time highs, as I've discussed last week also. And very nice formation. I mean, this formation you can see across all the patterns that I've talked about, but this is very clean. I mean, if I have to talk about clean quality pattern, right, this is a very clean quality pattern wherein you can see that every time when the constellation happens and the breakout happens, right, the Nifty Pharma has given a very nice up move, right? So after COVID, it gave a 77% move. Then it went into a nice constellation, say from the highs of say July 21 till this breakout, right? Till fifth month, May of 23, almost 2 years, right? It consolidated and then it gave a nice move of 86%. Then again from say October 24, right? From say let's start from September only. September 24 till date, right? It has already broken out. So it has almost consolidated 1.5 years plus kind of consolidation is done. But this time the pattern is different. So basically, earlier it made lower highs and lower lows, right? Downward sloping channel every time. But this time it has made higher lows, right? One contraction higher, second contraction higher, and then a breakout and a flat resistance on the upside. Correct. So this has been the case for the Nifty Pharma. So that is why we are talking about this segment and any consolation that happens. So last day it was a bad breakdown. It is very nice. I would say this is very nice. So after the initial up move, if a breakdown happens and it comes down, for me that's an opportunity for sure because I am extremely bullish on the healthcare, CDMO, diagnostic, hospitals, any such segment related to health for any 3, 5, 10 years. So after this long consolidation, I think this sector is very much poised. To give you a stat, right? So Nifty Pharma, the stocks in Nifty Pharma, I think around 96 stocks plus. Say let's take 96 to 100 names. Out of them, 45 plus names gave 20% plus PAT expansion, PAT growth, right? So this is a very strong segment where a lot of winners are emerging, be it specialty chemicals catering to pharma or CDMO, hospitals, diagnostic, generics, right? Everything is kind of doing well. And that is why we can see this segment being breaking out to its all-time high. Beyond that, we'll talk about further to ETFs, and first one being Health I ETF, right? So this is one of the prime ETFs that we are tracking. We have spoken about Pharma Bees last time. So Pharma Bees actually track Nifty Pharma. I'll show you Pharma Bees first. So this is Pharma Bees. So Nifty Pharma is being tracked by Pharma Bees, but this is more of generic heavy biggies of India, like Sun Pharma, Lupin, Aurobindo, Wockhardt, like that. Okay, that applies to the US market primarily. Okay, that's why I ignored Nifty, sorry, Pharma Bees. I am interested in Health I ETF, this one, wherein the pattern is very nice, very clean. The decline is very structured, and last decline was around 18%, which is kind of a bit low, I would say. And the breakout also happened on a very high volume. So it actually featured in stage two breakout. And beyond that, it is consolidating right now. So any consolidation as close to 200 DMA would be a very nice opportunity, is what I believe, right? So this health IETF is very nice, is what I believe. Beyond that, we have more health, that is Motilal Oswal Health. It is a bit more diversified. It has a large number of stocks ranging from all the segments in the healthcare in the country. And last time it gave a move of 107%, which was a very nice move. And the decline is very narrow. I mean, when you compare this segment with respect to mid cap and even small cap, right? Those guys fell more than 18%. The small cap fell around 28%, but these guys fell only 19%. Recently, only 13, 14%. So decline is very orderly. I would ignore this ETF. I am more interested in healthcare ETF, recently launched ETF. This is so, yeah, this one. So healthcare ETF has been making all-time highs recently, and right now it is breaking down. So this is a recent launch, and I am more interested in this segment because this ETF has a specialty of having everything. I mean, whatever healthcare thing that you have within Nifty 500, be it hospitals, diagnostics, generics, biotechs, CDMOs, novel thing, chemical entities catering to pharma and stuff, from APIs to CDMO, everything is there. Okay. So that is why I think with respect to Mo Health, Motilal Oswal Health, I'm more inclined towards healthcare, this ETF. And I'll conclude this segment of ETF discussion saying that we are in a very nice constructive consolidation right now. wherein the consolidation has started from September 2024. Beyond that, we are consolidating in a very nice formation, wherein the mid cap segment has made the all-time highs. The Nifty Pharma has made all-time highs, but the small cap is consolidating, and the Nifty as a whole, the large cap segment is lagging big time. The triggers that we have discussed already, so in case I get more great ETFs and things like that, where I might see some opportunity, I might bring up. So that might be kind of a basket approach, and that is where one has a bit of lower risk with respect to the stocks and other stuff. So I'll conclude this segment, and we'll discuss about more on these terms next week and on the likes of that.